Hi, this is Manas from Invest Tech Series. Welcome back to our channel. Today we'll know how SIP will make you rich. Guys, one request, like you should listen to the entire video, and in the last I'll give you the bonus tips in the SIP, how it is going to help you. Now let's understand what is SIP and what are the types of SIP. So SIP is like an option in mutual fund investments where anyone can invest in mutual fund and participate in equity market, to get the better growth in their own assets. So SIP can be started with 100 rupees per month. Even somebody want to invest every day, they can go for it. Every week they can go for it. Every fortnight they can go for it. So the way you are earning money, the way you can invest or save, right? So let's say, suppose for an example, if a businessman earning daily, why can't he daily invest in the market? He definitely can invest daily in the market by setting up a daily SIP in any of the mutual fund companies. So the beauty of this investment is compounding interest. Compounding interest. That means whatever money you are investing, that is getting invested daily in the market. So you are getting ups and downs in the market. So you are getting more number of units, because number of times you are hitting the market, you are getting maximum price benefit. Buying price is always low if you go to invest in one go, right? Second, the number of years you are going to be invested in the markets. Let's say for an example, if you have started one SIP and you stayed long for next 20, 30 years, then the money will be in crores. So it is really hard to believe, but this is the fact. If you go back and check 30 years data, mutual fund, the best performing fund, they have given more than 22% kind of returns, and the average funds, they have given you somewhere around 13-14% returns. So both the situation, if you see, if I calculate somebody investing 10,000 rupees a month and for next 20 years at a rate of 15%, he is making 1.5 crore kind of money. And if the same money is growing at, let's say, 20%, the 10,000 rupees SIP today, for next 20 years, it is becoming 3 crore rupees. So let's suppose you are born not rich, but you can die rich. So the concept is, today if you save money, today if you invest money in mutual fund, then in future you will be definitely a crorepati. You will create a huge quantum of money, so that your next generation or generation to generation, they will never feel like money is a big problem for them. Today, if you talk about India, in India, maximum number of people are into below poverty line, or maybe you can say poor. They are not rich. So if you classify the rich segment, is not even 1% in India. So 99% people are still struggling for their day life, where if you start today thinking that after 20 years, 30 years, your next generation should not face this kind of issues, financial crunches or financial crisis, then you should or you must do investment in SIP today. So let's understand how this SIP works. You give, let's say, 100 rupees or 500 rupees or 5,000 rupees or 10,000 rupees. Every month you are investing. The fund manager, along with their research analyst in the team, they used to invest in equity market. So every day in, day out, they are doing research and finding new stocks, new ideas, and they are managing for you. Now, any mutual fund you have chosen, let's say you have invested 2 or 3 mutual funds consisting of, let's say, 200 stocks. So every month there are 5 to 10 stocks getting deleted. That means those who are not going to do well, that means there is no potential to grow, they are getting out of it, and they are adding also new 5 to 10 stocks every month, which is going to give you better returns. So depending upon the business cycle, if something goes wrong or any news coming in the market, that is getting factored in, because the fund manager is taking calls, taking actions whether to keep those sectoral stocks or not. So in this way, every month actively the fund manager is managing for you. So there is no need to get into direct equity, like you want to trade in direct stocks. So in direct stocks, you do not have bandwidth to do research. So if somebody is suggesting, like friend is suggesting you buy these stocks and you bought, but he will never suggest when to sell, what kind of returns you should expect. So it is always better to give money to the fund manager, those who are 100% into equity management, and for the last 20 years, 30 years, 40 years kind of experience they have. So they'll give justice to your money. And second, obviously over a period of time doing this kind of activities, they'll keep on holding good quality research based stocks for you, and those stocks are earning, let's say, more than 12%, 15% kind of returns, and those returns are in the mutual fund and is yours. So over a period of 20 years, 30 years, you will become definitely crorepati, if not today. So let's get real. Like, for the last 6 months, if you see the market fluctuations, there are a lot of news coming in, going out. But then currently Trump tariff, everybody was talking about, and that is finally got effected yesterday, right? So you see, market was down by 5% in April, but it was up by 7% in March. So ups and downs will keep on happening. News will keep on coming. But if you are investing your money in a strategy that is called SIP or STP, in that way you will definitely make money, and the fluctuation benefits you will get, like gathering more and more units when market is down. So the price of buying price is always less, and when market is going to go up, then you'll get the compounding effect, which is bigger in size. People say SIP also will not help you if market falls. But trust me, if you have a strategical calls, if you have started your SIP for a particular goal in your life, which is 5 years down, 10 years down the line, or maybe 20 years down the line, or maybe 30 years down the line. So people, those who are at 20s, they can definitely plan for 30, 40 years. So if you keep your money invested for a longer period of time, definitely you get money. Second, the problem here is why you need a Sarathi, why you need an advisor, why you need a distributor, because whenever your behavior changes, let's say market crashed and your mind saying that, boss, let's get out of it. There are a lot of clients calls us every day saying that let's get out of this because market is going down and down, and there are a lot of negative news is coming, hence let's get out of it. But that behavior is going to be managed by us, people like us in the market, where you should listen to them, like do not panic, do not take out do not take out your money during market fall. So you stay invested for a longer period of time and you will definitely make money, that's for sure. To know this, you can go and check in different websites like valuesresearch.com or maybe moneycontrol.com. You check out any fund for the last 20 years or 30 years returns, you get more than 1,000 times returns. So that is the beauty of SIP investment and for long term. So while we start the particular investment, we agreed, or we normally agree, for a particular reason I'm keeping this money, or for a particular period I'll keep this money. But when it comes to reality like this, people is to take out money in fear. So fear and greed, there are two behavioral issues in the investors mind. So that mind is going to be managed by people like us in the market. So you should consult your mutual fund distributor or advisor, whoever is close to you, and get advice by them, get suggestion from them, and stay invested, stay focused to your long-term goals, not the short-term fluctuations. Thank you so much. Happy investments.